It's Brian Preston, the Money Guy.
Next, we've got Timanam. His question is, how does the Money Guy recommend balancing investing versus saving for a down payment? I know I should be at 20 to 25% investing, but I'd also like to buy a house. And the struggle is real when you're trying to do that and invest 20 to 25%. What do you guys think about this? What advice would you give? Because I think that this is a pretty common problem, especially right now with the crazy markets.
I think a lot of people, Brian, are struggling with this, man. I think that housing is expensive, and because of interest rates has gotten more expensive. Inflation is a thing, so just living in general is getting more expensive. And we know we want to be saving for the future. We know we want to be making good decisions, but 25% early on in your career is hard. It's a hard number to hit. How do you balance those two? Or where do you make concessions? Or how do you approach that lexicon of decision making?
Well, we answered this one a lot, so bear with me. And the fact that this is a step 4 decision matrix type thing of the financial order of operations. If you go to moneyguy.com/resources, and we even cover this on the deep dive with the course at learn.moneyguy.com. But the thing I think is interesting is that we tell you when you get to step 4, you need to be having 3 to 6 months. If you're working, obviously retirees, it's much higher, but we're talking about house down payments. So this is a younger person. You know, there's a little grace built into the formula naturally, because I want that down payment. Since we ask you on that first house, you only have to put down 3 to 5%, not the 20% that you've heard a lot of people all your life tell you to do. I think the first purchase you can do 3 to 5%, and you're like, well, where's that going to come from? Because we still got to come up with 3 to 5%. Think about it in these terms. We always tell you 3 to 6 months worth of your income. Well, that's what, there's a spread between 3 to 6 months of what your expenses are. Income is different than expenses. And more than likely, because you're saving, you're trying to get to the 20-25% investment and savings rate. There's a spread between those, what you actually expend every month versus what the income. So I'm already giving you a frothy cash reserves by saying, hey, do 3 to 6 months of your income in cash reserves, and then your expenses, I want you to know, and by the way, that's a great exercise to know if you can even afford this house that you're trying to come up with a down payment. Know what your monthly burn rate is of expenses. And I think that there's enough play in that you can come up with that down payment to reach the 3 to 5%. And I also understand, I've had times in my life, because I'd be a hypocrite, and I try to tell you we eat our own cooking, so we actually practice what we preach around here. And if you did go below the 3-month threshold, that might happen, because the perfect house shows up. You want to get into it, but it's going to drive you down to a month and a half to 2 months worth of cash reserves, of even on your expense side of things. It doesn't mean you don't do it. It just means you need to do it scared, like really scared. And the fact that you better have a plan to how do you get this thing back up to 3 months of a living expenses, or the 6 months of living expenses, if that's what you determined you needed, ASAP, and feel like there's a clock ticking in the background that you don't know when the buzzer's going to go off, that you're caught. And getting caught without cash reserves is a scary thing. But I also want to give you the grace to understand, be smart, be a financial mutant, and you can make it through this.
Yeah, I think sometimes life happens. We have to have somewhere to live. We have to have a roof over our head. We have to be able to get ourselves to our vocation. We have to be able to eat. Saving is wonderful, and we encourage you to do it. We think that everybody should have some mechanism where they can do it. But to satisfy some of those other, what I'm going to say are like basic necessities, you might have to pause it for a while. You may have to back down on that 25% savings rate to get to that down payment. I think that that's okay. Do it, hit your goal, get through it, and then start saving aggressively to make up for any time that you may have lost. I don't think that's a bad thing. If you need permission for someone to tell you that's okay, consider this your permission. Do that, but try to do it in a strategic and a quickly reboundable way, that once you get past that down payment, once you get into the house, once you get on to the next phase, you save aggressively to make up for lost time.
Your voice wasn't scolding or scary enough to say the grace part, because I see what you're saying, but you need to be scared, guys, if you're going to do that, because that kind of makes me twitch a little bit, because I just don't want you to get caught naked, because it's so scary to not have cash reserves. I've been there. I've shared it with you guys. I came up with this crazy scheme of living, thinking my home equity was going to be my cash reserves. Then 2008 and 2011 through 11, where real estate values got completely obliterated, and the bank sent the letter saying, "Hey, you don't have access to that cash, that credit limit anymore like you thought." And to be without cash during a downturn is such a scary thing. I've shared with you guys. It's like oxygen. We all take oxygen for granted. We all breathe deep, let it out. We can waste it. I can breathe fast. We can do whatever you want to with the oxygen. But if you go underwater, you go, "Why was I so flippant about that daggum oxygen? I really need it." It's the same way with cash. Be scared if you're without that cash reserves. I want to give you, I think Bo's exactly right. You can have the grace, but you better be scared, because most of the time you can breathe freely, you can get cash freely, but I want to make sure you do prioritize cash reserves in such a way that if you get in a really pickle of a situation, you're not going to drown under the pressure.